Hello traders, welcome back to the Learn to Trade channel. We are going to look at gold today. The reason we're going to look at gold is because we have achieved, or we have hit, a very big level in this precious metal, right? After this big drop to the downside, right? Everybody remembers that. This was, if I remember correctly, a 5.9% move to the downside. Yep, a 5.9% move to the downside from high to lows in a couple of hours. Now, after we hit this level, we rejected it and moved higher to test these previous lows. Now, at the retest of these previous lows is where we saw sellers jump into the market, and now we are retesting back these lows. So basically what we're doing here is we are playing a range in gold. Now, if you notice, we haven't retested the ultimate lows, but you have to remember that support and resistance are actually zones and not just straight lines. So basically this is the zone that I'm talking about. Now, you also have to consider that this was the zone where we saw buyers jumping back in September 2020. Same exact zone that ultimately led to the 1960, right? If you don't trust me, let me just put on a straight line and you can see that it's the same bottom of the same zone. So this is quite an interesting area that we are trading in. Now, having said that, you need to consider also that we are in a immediate bearish structure. What does this mean? This means that the current market pressure is a bearish one, and buying into bearish pressure is quite speculative. So in order for us to even consider a long here, we would need the immediate structure to break. This leads us to the 50-minute chart right here. And we are going to look at the immediate structure by looking at the previous highs, lower highs. If we start looking at the previous lower highs, this one right here, this one right here, this one right here, even this one right here actually, you can see that the immediate structure that we are trading could in fact be broken with. But the thing about this structure, or the immediate structure, is that we are seeing buyers jumping in around the 1865. You can see that we have one rejection here, two rejections, three rejections, and kind of a fourth one. So in order for us to even consider going long, we need the current structure, which is this one right here, to break and these lows to break. So in fact, we would need a break of the structure, a break of the current highs and the previous lows, a retest for a nice buy in gold. And the thing about this scenario is that if we go back to the 2-3 hour chart, it could yield a nice risk to reward to the first target, which should be the high of the range. Let's have a look at the risk versus the reward on this trade. It should be a 1 to 2 risk to reward scenario to the highs of the range, and to the highs of the move a 1 to 6.5. So heads up to that, and be careful when trading gold because it is a volatile market. And if you want to trade with us, because we are going to be trading this market, and you can get my exact entry levels and exit levels and my trade management, just I'm going to leave you a link below this video where you can subscribe to the VIP channel. Thank you.